Yo, so yeah, I just want to get this off quick. Just not really a huge amount to talk about, but really just stating that 75/40 is actually just very important for pushing higher. I would say 75, I mean 75/12 area, just like the tiniest sweep below the lows here would be allowable. And then, I'd want a quick reclaim of 75/40. Ideally 75/40 actually, ideally this close actually holds and we just like push up. That's what I'm hoping for, or that's what I'd like to see play out. If it sweeps below 75/12 area, like just literally right in that area, I don't want it to really go any lower. Then that's fine. And I'd want to see a very quick move up and reclaim of 75/40. Below that, then I think we're at a point of retesting 7400 area, possibly down to like 7390. That's what I'd be looking for at that point. If we go down and retest there, then I will definitely look for a buyer down there, and it'll be a different case scenario. Kind of, this will be like for a larger swing, just another kind of like higher low type deal. But yeah, 75/40. There was just tons of buying in this area. Lots of buying after Globex open yesterday. Look at that mega size coming in. That is, yeah, that's after midnight open. So yeah, huge size coming in. Basically just telling the story of like a squeeze. It did squeeze. It got up to the highs, got up to 75.90, and then rejected pretty sharply. So yeah, just very interested to see kind of how it plays out after this. There's still a lot of buying going on here. We still stayed pretty positive throughout the day, even after this huge downturn. Like if you look at that, just looking on the delta, right? Like sure, yeah, we get all the way up to about 8K. But even after that dump, we're still hitting peaks of like 4.4 and stuff. So that was a really strong dump, but we are still very much in the positive throughout the day. And even at the lowest point, yeah, we dipped into the negatives briefly, but then quickly by close, I guess we closed 1K positive, and then after just came up again into that around 3-4K area. So still looking like a lot of buyers are buying this area. They're really fighting to hold it. So I'm interested just to see if they can hold it. That's something. Actually, screw it. Yeah, let's talk about it. BAML. I have it on my chart. I check it semi-regularly. Excuse me, just to see like when we're making, these huge moves up, just to see where we end up. What this is like it says, high yield option adjusted spread. So it's an index basically of it's just counted as two baskets of high yield bonds. One are like junk bonds, think like poor credit rating on businesses, corporate bonds type deal. So really just like not the safest bonds to hold. And normally they pay quite high yield to hold them. And then on the other side, it'll be like a, quote unquote risk-free bond, something like treasury yield essentially. So just think of it as like junk bonds versus treasury yields. It's the spread in the yield that they pay between them. So when the spread is really small, so traditionally when you have like such a garbage bond compared to a very safe bond, like a treasury yield, historically safe, I'm putting that in huge quotations, obviously. But yeah, anyways, we'll just track it like that. So you have very unsafe, high risk to low risk. Let's just put it that way. Normally the high risk is paying a high yield to hold it. So if you're holding that corporate junk bond, not all corporate bonds are junk. I'm just saying it's like a junk corporate bond is the best case example for something like this. So when you're holding that, you should be generally statistically getting paid a pretty decent yield to hold it because it's more risky versus a treasury. But when we get into kind of like peak bubbles where everything is so risk on, money's flowing around crazy freely, there's just so much risk on appetite, that is when you will see this spread index at just rock bottoms, essentially. I'll just zoom out kind of here. We're already on the daily, but I don't want to go on weekly because I still want you to see the daily. But yeah, so look at these previous. So that was started this year, January, and then of course we from January went on pretty sharp downturn. Not super sharp, but we really just went down from there into that kind of trough of March, and then we just rocketed up again. Previous year, this was February last year. So yep, that was right before things really took a nosedive, right? Let's go further back here. We're going to keep it at that level, right? So at that level too, June 07, August, July, 07. So that is about, I want to say about a year-ish out from the absolute rock bottom of 2008 financial crisis. So this was a close-ish to top indicator, right? So this is marking out probably at some point we're seeing some highs here. I think it was closer maybe to September. I can't remember. Somewhere generally in there was a peak in the market. And then from then on, it just started to downturn. And then it got obviously very sharp. This was not the bottom of the market that year. The bottom was actually, I believe, in 09. I think it was like early 09 was the actual bottom of the, that downturn of that cycle. But this is just marking like the peak panic, basically, which was September, October, November of 2008. That's when the market was just selling off like crazy. And then after this, you saw a little bit of chop, and the market actually started to bottom out like kind of around here, I think. But anyways, so yeah, it's just interesting to keep an eye on because it essentially, it makes sense. And then obviously like this started just before the .com bubble, ironically. But yeah, it was pretty low before the, 98, 99 before the .com bubble. So I just like to keep it tracked. But yeah, it does make sense, right? So when we're peak risk on, that is when buyers will, be willing to accept like the least amount of yield or interest being paid on junk bonds kind of thing. They'll treat them almost the same as the low risk because they're just like, everything's risk on right now. We're full risk on. Doesn't matter. I don't care what, if it's what kind of bond it is, like it's generally going to be paying the same. So, but as we get into more uncertain times, more fearful times, markets are downturning, which I'm sure is coming up soon in the next, at least, I want to say year or two. That's when you'll really see this thing start to rocket. And then all of a sudden people will be flying to, historically they've flown to treasuries and they'll get out of anything risky, even if it's a bond, if it's a risky bond that's, with a company that looks like they, don't have a lot of cash flow. They have not a lot of assets. They have a lot of debt. They have a poor credit rating. Any of that would put that company in more of like the junk index for corporate bonds, right? Because in a time of uncertainty, if there's, in a financial downturn, in a real market downturn, those companies are more likely to go belly up. They're more likely to suffer. So businesses you could think of like that, in this case might be like coming up would be like retail. A lot of brick and mortar stores. If you sell luxury goods, I wouldn't even say luxury. If you just sell like kind of like cheap stuff that is just think clothing in general. I would think more middle of the road. If you're just your average, like whatever brick and mortar store, through any type of financial downturning, financial crisis, you're going to be hit hard because those are the things that people are going to cut quick. They're going to say, yeah, we're not buying we don't need any new jeans or shirts or, hats, any of that. Like, that's all out the window for the majority of people. So, unless in the clothing space, even luxury, even they suffer because likely the people that buy that stuff are usually in these times, they're usually over levered. They're over invested in the market. They have bought too many toys. They've borrowed too much against their assets. So likely then they need to sell a lot of their luxury stuff. So it hits everyone the same usually when we're talking about like a major financial crisis. Little downturns don't bother those guys nearly as much, but the big ones, they hit them just as hard for sure. So anyways, that's that quick explanation. So just going on to the actual chart here. I already showed you on order flow, like big buys, right? Big buys after midnight open last night. And then those big buys are kind of holding here. So I expect this region to hold. There was a lot of sellers trying to sell here, especially into close. We'll see. Well, it's really, I think this close is very critical on how it works out for sure. NQ, pushing up into close, that's a good look too. You have some of these sellers trapped at the lows. So I like it for just a continuation, a slow burner higher that really just, starts to cook throughout the night maybe. If that doesn't happen and we actually see sellers really start to push and surprise buyers, I guess, that would just be really surprising overall, because one thing we've known is buyers have been in control basically this whole way. So until we get to some of the most recent highs, so we'll see. But yeah, like I said, I would allow, I don't really want to see it because I don't want to see buyers lose this area, the 75.40, 75.30 area. I really don't want to see them lose it for a continued move to all-time highs, right? Eventually they're going to lose it in a big way. But 75.12 area, if we get a quick move down and up from there, like I'm talking mega V shape, then that's allowable. Otherwise, if sellers really want to take control, they can take this all the way down to 7,400. And that would be a large downturn from there. So that's what I mean. It's kind of a very crucial point right here where we're at. And then, I'm focused solely on ES. The major sizes on ES, like NQ, kind of like, actually, NQ really suffered the most throughout the day. They were nicely positive on Delta and then just finished all the way negative towards the end of the day. So quite a flip. These two things are not acting the same way, but why is that likely? What had a really nightmare day today? Our new bubble boy, SpaceX. Pretty deep downturn today. That was from last week, from the close of 188 last week to, I guess, it closed a lot lower after hours. And then pre-market was already a lot lower, but yeah, to closing down at the 150s. I'm not playing at all with this. I could care less about taking this right now, for where the market's at. Like I just showed you, we are peak risk on. I only want to be a buyer of these things when we are like peak risk off, basically. When that BAML, when that chart is like sky high, that's when I'd like to dabble in some of this stuff. So yeah, for now, no. If you really are wanting to play this, I would say I wouldn't even be a buyer here. I'd be a buyer either in like 130, 140 area. And I'm saying hypothetically, I'm not going to buy this crap. Or 94. If we saw a sharp move down to 137, you probably see a bounce from there, and then we'd come and figure out what we're going to do in here. If we see a really sharp move down to 92s, I'd be tempted because that would just be crazy oversold and we'd likely see a bounce. I might just take some short-term options plays off of that depending on what the indexes are doing. But again, likely not. I don't see it happening. I don't want to make any dumb moves. That would just be a high risk move to do that. And I'm already doing pretty well when it comes to trading the indexes, so I don't need to add any risk. But that is that. So yeah, nightmare day for SpaceX. Looking pretty much like some exiting going on for sure. You can be sure. I don't think Elon is exiting. I think he kind of has to go through this whole motion for a while. I think that's part of it. However, some of his earliest investors that helped him buy Twitter, which later turned into funding for XAI, a lot of these companies that were hemorrhaging money, and Twitter is definitely nowhere close to better off than when he bought it. It has lost a ton of money, or X, whatever. So a lot of the early investors, I think Saudis and whoever else, you can be sure they're exiting. You can be sure they're recouping on their investment through this. So 100% this is an exit event for some of them, probably for some employees. However, I believe Elon is, like he does, he just is staying in this. And, I'm sure at some point there will be a good price to buy this at in the future. But I think that'll be more in the realm of space travel and the future there versus AI. I don't know, unless there's some breakthrough with AI. But yeah, I mean, honestly, XAI, like they're a key provider for data centers for some of these bigger players. They've already made a deal, I believe, with Anthropic, and then also, I believe, with Google. Some big deals that are going to put them in the cash flow plus column. So that's good for XAI. So for the time being, however, a nightmare scenario is playing out right now for AI, where a lot of these white collar, kind of mid-level businesses, I'm not even sure what I'm trying to say when I say mid-level businesses, but just think like already a big one that has come out and done it is Walmart. But there's been a few of these companies that have said they've tried integrating AI and it's essentially just too expensive. So they're just stopping, or they're significantly rolling it back to a model of, it's not a subscription model that they would do, before they would do some huge corporate subscription type model for these AI companies. Now they've rolled it back to custom pay per usage type models that they've worked out with these companies. So, and that is because they just have not seen a match in production from using it for how expensive it is. And that is also bad because a lot of these AI companies are currently kind of subsidizing the pricing because their usage of data centers is also being subsidized, like by XAI is subsidizing data centers for Anthropic, which is helping Anthropic become profitable, which influences obviously their pricing models. So which allows them to price it at, what in the future will be a discounted rate for some of these companies. So I think essentially it's just a lot more expensive to use than people initially realized or than people are predicting. And in the future, it's going to be really interesting because it's one side's got to give, essentially. And if the one side gives, if AI just totally flops as far as its usage case and the amount of money flowing in and the adoption, if there's not a lot of adoption, there's not a lot of money flowing in, then all of a sudden this whole house of cards just crumbles. The flip side is there's some breakthrough in energy, and energy gets very inexpensive, which currently with the Strait of Hormuz is not happening. I don't know. So if there's some breakthrough as far as nuclear tech, I know there's a large push for nuclear modular reactors for energy, because basically that's what they need to happen. In order for them to beat this, they need to make energy insanely cheap for these data centers, like insanely cheap. Otherwise, it's too expensive. So anyways, that's the end of that rant. Yeah, so I've already said it. You already know what to look for. And yeah, targeting all-time highs. That is what I'm targeting. Move below 75.12 could go all the way down to, I would start looking at this TR pocket at 74.38 into 74.30. Ultimately could dip all the way to 7,400. We don't know, but I don't think that's going to happen. I think it's going to hold. We'll see. I'm not sure. Nothing's for sure. But yeah, holding 75.40, then we're chilling. We're moving up. Let's see, did I mark that out as I did, as a manipulation. So I guess that's really holding. So then we're starting to move up, all along these standard deviations, and we're looking at 7804 is a target. 7805, 7804. Yeah, 7804. That's the target, this TR pocket over here. So that is the overall goal. And we'll see how it works out. We'll see how it plays out. Anyways, that's all for now. Trade safe this week. Take care. Bye.